Candlestick patterns. I'm going to remind you that we have been approaching this beginner day trading in the form of an onion. Why?
Why? ¿Cómo que why?
Because onions have
layers. Ogres are like onions.
candlestick patterns are like
Onions. Layers.
so one layer may be
They stand. No, not really, no.
just identifying an overall shape within a chart. Another layer could be
Oh, they make you cry.
a two candlestick sequence, a three candlestick sequence. Another layer of the onion or the candlestick pattern can be, once I've identified it, how does that help me trade?
Example? Example?
We will jump right into an example shortly.
Oh, you leave them out in the sun, they get all brown, start sprouting little white hairs. No!
Hopefully you've been following along in all the other videos of the series, and so you know that we're still using Webull, and we've been doing paper trading. I decided to pick Apple for now because it has a lot of activity and it hopefully makes it easier to do things. And what I did is I drew a vertical line exactly at the beginning of the day and a vertical line at the end of the day. We jump right into our first example. So here we have a graph, and we already know how to draw our trend lines, so let's start doing that. There's one support line, and during that period, there's the resistance, support, resistance, support, and resistance. And that is a bullish flag pattern, or it's just one word version of it. I've seen different examples. And you're saying, well, how is that a flag? There's the flag. The verbal definition or description of a flag pattern is that in a longer time interval, say from here, because it was increasing from somewhere over here before we started tracking, and it is still increasing somewhere after this, and there's a longer time interval here, in this case an increasing direction, interrupted by a consolidation in the other direction, and it forms the flag. All right, so now that we described or were introduced to our first candlestick pattern, can we spot the bullish flag pattern? We can start by drawing our trend lines. Let's draw our resistance line. And there you have it. Since we're approaching our day trading as layers of an onion, right now I just want to introduce to you several different candlesticks patterns without worrying about what to do with them. Just be able to identify them on a chart. The hammer pattern. So while the previous candlestick pattern was a trend, multiple candles, it was a whole series, and looking at a long-term interval, this pattern, the hammer pattern, is a single candlestick pattern. So we were going down, and then we came up, and the body is at or near the top. There should be hardly no wick or shadow above at the top of the body. The shadow should be long with respect to the body. Some say at twice or so. Looking at the same graph as before, Apple for a single day, and you see where we left the flag pattern or flagpole pattern from before. I took the liberty of finding a few of them, and so we'll just zoom in and take a look here at some of these. Here we have one possibly, right? So the body is near the top. There is a little bit of a wick up there. It's not twice as long. So we could debate here whether that's really one or not. Let's continue. Here's another one that I found, perhaps. So here we have, because again we were going down, now we're going up, bullish. The body is near the top. The wick on the bottom is twice as thick as the body. Where's the next one? I thought I found another one. Here we go. And so this one we were going down, and this signals a change to a bullish trend. The body is, there is some wick up here, so again we could debate if that's indeed a hammer or not. I think I have one more. Let's see. And so, oh yes, I wanted to bring this one up because it is red. A red hammer candlestick pattern is still a bullish sign. The bulls were still able to counteract the bears. They were just not able to bring the closing price up to the opening price. So remember that for this, so the way this you read this is the opening price is at the top of the red edge of the body. The closing price is the bottom edge of the body. So the total, the lowest price for that interval is down here, and the highest price is up here. So while it went low, the bulls were able to bring the closing price back up, but not quite past higher than the open. And so it's still a red candle, but it still is a hammer, and it signals a change in direction. Here is one more example of the hammer, or the inverted hammer. There. So notice the trend was going down, then the inverted hammer, and it's confirmed by the upward trend. Our next single candlestick pattern is the shooting star, and it's a good time to cover it because it's the opposite of inverted hammer. Here we have our full day of trading. Obviously, we were recording this earlier, or we started earlier, and the next trading day has started, but we're going to ignore that. So here I found one example of the shooting star. Now it's not very clearly defined. Well, the body of it is. So we have the upward trend, bullish trend, positive trend, increasing price, and then we have the candle, and then we have a somewhat, because of these two red candles, somewhat of a downward trend. So it's still a change in trend, at least momentarily. So you can see that this is the opposite of the inverted hammer because, again, the wick or shadow is more than twice the height or length of the body, but whereas inverted hammer, the long wick would be at the bottom, it would be a Y. This is the other way. And it can be red again. It doesn't have to be green. The whole point is we have an upward trend, the shooting star with the body at the bottom, and then the downward trend. That's what makes the shooting star. I think I found one last example of the shooting star. So here we go. There it is. We have the upward trend, body near the bottom, long wick at the top, and the downward trend. Next is the hanging man. And the hanging man, the actual candlestick looks just like the inverted hammer, and the difference is context. Here I tried to depict the hammer versus the hanging man. So the hammer and the hanging man, doesn't matter the color really, look the same, the actual candle. It's the context. So the context for the hammer is that it was a descending or bearish trend, then the hammer, and then the upward or bullish trend. Whereas the hanging man is the bullish trend, the upward pattern, then the hanging man candle, and then the downward trend. Before I show you the example of the hanging man, let's throw the shooting star in. You'll eventually not get confused. So the hammer and the hanging man look the same, mean the opposite. The shooting star and the hanging man look the opposite, mean the same. So the hanging man, the body's at the top, still indicates a change from upward to downward trend. Shooting star, body's at the bottom, but still indicates upward to downward trend. Okay, let's finish off with a couple of examples. Here is our marked off trading day for Apple on Webull. And let me zoom in here very quickly. You can see the hanging man would be this one here. We have the upward trend, the hanging man candle, and the downward trend. And I believe there's our other example of a hanging man. Here we go. This one I actually put trend lines in very quickly. So there's our upward trend, there's the hanging man, and there's the downward trend. And I think I've thrown in enough at you. You have the flag, the hammer, the hanging man, and the shooting star. And if I were you, the best thing to do is just find a stock, try to identify those patterns, and just get very familiar with them. And we will, again, like layers of an onion, we'll learn, okay, now that I can recognize them, what do I do? And I did not want to throw any more patterns at you at the moment. I think that's plenty for now.